Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. Okay, so let's make a full breakdown of the situation that we currently have for AUDUSD. Now, starting here from the monthly time frame, what we can see is that at the moment we are testing a very strong area of previous monthly demand and support, which in fact made this market create all this move to the upside starting from this area, which was once again respected here. And at the moment we're testing this area once again, from which there is definitely the possibility to see the market create a rejection to the upside and at least to react to this area, since it is a very strong historical structure, support and demand area. Dropping down on the weekly time frame, what do we notice? Now here on the weekly looking left, we can see that exactly from here, the market created previous weekly resistance, creating this last red candle before all this move to the upside, which since the market is currently approaching it from above, is now turned here support and demand. And what we could expect is a potential rejection away from the area, considering that if we look closer, we can notice how all this move to the downside was created without not even one green candle, showing how overextended the market is at the moment to the downside. So we could expect a potential short-term rejection to the upside, at least for a correction to the 0.382 of the Fibonacci taken on this weekly impulse, which in this case would be lining up at this area, which is a first potential upside target, because if you have a very strong trend, you expect the market at least to retrace to the 0.32 of the Fibonacci taken on the impulse leg. So also here in the weekly, we could expect a correction. Now, dropping down the daily time frame, what do we notice? Now, from a daily perspective, we can see how in creating this move to the downside, the market has also now printed this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would expect is for the market to create a rejection to the upside. Specifically, you would like to see the market retrace at least to the 0.32 of the Fibonacci taken on the daily impulse, as I have just explained on the weekly time frame. So also here on the daily, we could expect a rejection to the upside at least to this area for a short-term correction and completion of this overextended M pattern. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the AUD, we can see how with the last reports, we went from having minus 57.8k net positions all the way up to now having minus 27.7k net positions, with shorts going from 92k to 64k and longs going from 25k to 36k. So from an institutional perspective, on the AUD, we're seeing longs added and shorts closed. Important also to point out that if you're looking at the AUD, you're actually looking at AUDUSD, because all currencies on this spot are traded against the USD. So if you're checking the data for the AUD, you are already checking AUDUSD. So how we could be approaching this potential rejection to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you have the possibility to join with a big discount. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still some time for this offer before it expires and the price increases again. But there are also limited spots, so I suggest to take advantage as soon as possible, because if spots gets filled, then the promotion will end anyway. And from here, you can see that you can join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.